presentation is for educational purposes and is not financial advice, so no financial advice. Please join me in welcoming our own Melody Lake.
Good morning.
Good morning.
Good morning.
Am I a good level?
Yes.
Okay, good. Good. Well, thank you all for coming out today. I just put this presentation together in the last 9 days or so. We had a hole in the schedule, so I jumped in. So this is an introduction, and I originally called the talk Blockchain 101, but I got a lot of blank stares. You know, maybe I'm from Mars or something. What is blockchain? So I figured I needed more to be added to the title. I'm still not sure what the title is, but it's the technology that's here to stay. So let's just start here. Thank you so much for coming out. I'm Melody Blake. Thank Kat for such a warm intro today. And it was a great joke. I loved it. And it's right on for what we're talking about today. Privacy, that's one of the things. Owning your own data, that's another thing. Who owns your data? You know, how open is your life, and how open do you want your life? My fascination with the world of crypto has grown since 2016, and I'm going to attempt to inform and educate. I'm not going to be giving any financial advice, as was said already. And again, this is an introduction, and you are asked to do your own due diligence. And what I want to say is, what level do we have here? Who knows a lot, with a raised hand, who knows a lot about crypto and blockchain and Bitcoin? Who knows a lot? Nobody. Okay, nobody. That's great. Who knows some? Okay, okay. And we've got there also. Okay, who knows nothing? Okay, the majority of you know nothing. Okay, and I asked Isaias earlier if he knew anything, and he knows all about it. He was talking about how, you know, you have privacy when you own cryptocurrency and when you're dealing with the blockchain. I have a sign-up sheet over there with a couple of pens if you'd like to have further conversation afterwards. And, you know, just put your email or your phone number or WhatsApp, however, and we'll just, you know, we'll have further conversation. So I want you to know that this is my best life now. I love it here. I love this community, and I believe a place of coming out into more authenticity, and I think that's a lot of why we're here. And this whole project called Blockchain is about authenticity. So I think that, you know, we've been guided to a place that we want our lives to have more authenticity. So this is perfect too. I want to speak of a hopeful future, safe and freer than ever. I used Google. I gathered some information from the 2021 World Economic Forum in Davos. And that meeting's theme was the Great Reset. Not a mistake, because that's what we're in right now, is a great reset. I also had knowledge from countless videos, articles, and conversations. So this is not a world of criminals and bad actors. You know, it's gotten a bad rap. You know, the black hats, they used to call them back in the early teens. And, you know, it was all about black market and nefarious action. And that's not the way that life is right now. Of course, there are going to be, you know, scammers, but that's everywhere on the internet right now. You have to be careful and do take care. But there is no longer the fear-mongering that happened before has been kind of dissipated from the wild west of cryptocurrency, and hopefully it's fading now with more worldwide adoption. of cryptocurrency and of the blockchain. So I hope to show that the future has an expanded sense of community collaboration and cooperation. So the blockchain technology, the basics, it's decentralized, it's immutable, it's secure, it's transparent. An anonymous person or entity named Satoshi Nakamoto, as a direct response to the global financial crash and failings of the traditional financial systems, banking, investing, and lack of transparency, this entity created the blockchain. If you remember in 2008, the bankers got bailed out, got golden parachutes. Well, millions lost their savings, their 401ks, homes were foreclosed, retirement funds lost, and havoc in general was experienced. It was a terrible time for me as well, because I got a direct hit from Hurricane Ike, and my family went through havoc as well. And of course, we just became a little blip on the work radar. Big hurricane hits directly. Oh, Lehman Brothers just went down. I think that's pretty important. So that's what happened back then. We're dealing with centralized systems and decentralized system. Centralized system over here, decentralized system over here. Centralized is top-down, top-down. The decentralized system is network, corporate, community, inequality, peer-to-peer level playing field. Tech pays millions of dollars for massive computer rooms, or licensed software nodes run on individual computers on the blockchain. So an example of the centralized system is that every time you make an electronic payment, the transaction passes through multiple systems, each of which plays a role in processing that payment. It forms a sequence of checks and balances that exist between the payer and the payee. Typically, it involves a series of banks or other processors which keep track of the money from A to B. Identities are verified, creditworthiness is established, and sums of money go from one place to another. And there's accountability. So the example of the decentralized is entered blockchain, which has the potential to disrupt. I love disruptions, but other people do too. And it's going to it has the potential to disrupt that whole process of centralized banking and centralized institutions. So, and not just for payments. It can track anything. We're talking about a blockchain, which is a network, and it includes transactions in the marketplace of goods. It includes, it is technology about being immutable, secure, and transparent. So the blockchain allows consumers and suppliers to connect directly, removing the need for the third party. And it uses cryptography to keep everything secure. And the blockchain provides a decentralized database, or a digital ledger, or a chronological list of events, of transactions, of everything and everyone on the network can see it. This network is essentially a chain of computers that must all approve the exchange before it can be verified and recorded. And that can happen like really fast. It could take minutes, hours, but the network verification with the various networks to make it okay. Transparency. Instead of having to trust in a transaction with centralized banks and other intermediaries, the blockchain puts the trust out here, and no single party on the network can exert any control or influence on the ledger. The data pertaining to a transaction will be stored simultaneously on hundreds, thousands, perhaps hundreds of thousands of computers within that defined network, within that defined blockchain, and will update close to real time. And often, all of these computers are just operating in the cloud. And you can picture a spider web, or however you want to picture network. That's the blockchain. Blockchain is designed to be unhackable and immutable. It can't be deleted, it can't be altered, and since it exists and operates on every computer connected with the particular blockchain, nothing changes without majority rule. So there's a vote taken most often, whenever it's needed, whenever something needs to be changed or altered. Blockchain technology can be used to record and track anything from financial transactions to medical records, ownership of a photo, a piece of music, a patent on a new invention, or the origin of food to table, from the farm to the table. Just like a technology company can be created for any reason, a blockchain can be created to solve virtually any problem around the world with no central control or authority, only by the authority of the network. Decentralized, no central authority. I'm going to go and talk a little bit about the web, just for historical purposes and to show something about where we are right now in terms of technology and how, we as a community here, especially most of us being senior and being at a certain age, some of us have put aside taking action and knowing this. And so I'm very grateful that you're here today, because you apparently want to know something more about this. And take a little more control of your own life and your own well-being. So when I, back in '97, when I started around the internet, and computers, it was a read-only. It was Web 1. And read-only was 1990 to 2004. You remember DOS? Yeah, right. We had basic web pages, we had email, we had HTML, and we were beginning to have e-commerce. Web 2 came about between 2004 and now. And that is read and write. The other one was read only. This is read and write. So now we have social media, apps, user-generated content, cameras and video apps, mobile access, corporations monetizing your data, as was in the joke, high-speed communication, global internet, and that's all centralized still. Centralized computing, storage, and connectivity controlled by multinational corporations like Amazon, Google, Apple, and banks and other entities. So Web 3.0 is built totally upon the blockchain and decentralized autonomous organizations, which are called DAOs, DAO. This is from 2014. I'm sorry, the other one was 2000. No, it is till now, sorry. 2014 till the present. That's when Web 3 started coming in. And it has dApps, we have user control, we can monetize our own data, NFTs, metaverse, AI, and is this Greek to anybody? Permissionless interoperability, operated by thousands of computer software nodes. So it's virtual democracy. It's as democratic as we can get nowadays. And that's the kind of the long and short of that. IBM describes blockchain as, quote, a shared immutable ledger that facilitates the process of recording transactions and tracking assets in a business network. An asset can be a tangible, a house, car, cash, land, an intangible, intellectual property, patents, copyrights, branding. Virtually anything of value can be tracked and traded on a blockchain network, reducing risks and cutting costs for all involved. That was IBM. Bill Gates, quote, "Blockchain is the most important invention since the internet itself. It will change the way we think about money, business, and the world." And that was Bill Gates. So Bitcoin, what's Bitcoin? It's often called digital gold. It's gaining adoption. It's becoming widely accepted. It's got a long way to go. Right now, the institutions have finally come in, and we're talking about like BlackRock and Fidelity, Grayscale, some of those big institutions, and a little more about that. The reason for Bitcoin, to start with, along with what I said about Satoshi Nakamoto earlier about creating the blockchain, he created the blockchain because he created a white paper titled Bitcoin, a peer-to-peer electronic cash system. That was described in how Bitcoin functions, and it was published right by Satoshi Nakamoto as a direct response to the global financial crash and failings, like I said before, of the traditional financial systems, banking, investments, and lack of transparency. So the adoption by the hedge funds and the banks and the institutions right now was expected, but they might be a little greedy. We might have forgotten that they're greedy, and they're not exactly wanting a level playing field. And so there's some interesting things that I really don't have a handle on because they're in the market right now. But we're still looking for more adoption from retail people, not just the big institutions. So, we don't want the markets manipulated by the way anything happened in 2008, the way they manipulated the markets back then and everything crashed. So the blockchain allows you and me to send BTC to each other through an exchange without involving centralized entities, through wallets and exchanges. So a wallet is a digital tool for the user to store, send, and receive digital currencies. They include hardware, software, and online wallets, each with a different level of security. Private key is a decrypted secret code that allows only the user to access and manage. It is separate and different from a username or a password. And a little more about that. An exchange is a trading platform used for buying and selling crypto. It is not recommended to leave your crypto assets on an exchange. The saying, "not your keys, not your crypto," emphasizes the importance of your security and your self-custody of your coins. Let me go back on that a bit. A wallet is where you have ownership. It is your keys. It is your decrypted code. Nobody else has that. So your assets are safe and only for you to use. So that's your private key, and you don't give it out to anybody. So on an exchange, however, it's different than a wallet, because the exchange is the place where you take it from the wallet, you put it onto the exchange, and then you disseminate it maybe to your bank account. And so you don't want to leave your assets on the exchange because you don't have keys. And again, that expression, "not your keys, not your crypto," And an example of that is FTX. Who here has ever heard of FTX? Got some hands? Okay. FTX was an exchange a couple of years ago. The CEO, have you heard of Sam Bankman-Fried? Okay, that John acted very nefariously. He embezzled funds. He was convicted and he's in prison. But almost all the millions of dollars that were on the exchanges were lost forever. Don't leave your assets on the exchange. So, there were issued back in the very, very beginning 21 million Bitcoin. That's the total. So it's finite. And that's as many as ever will be produced. And we figure that at least 2 million, 3 million are gone forever, lost in, some way of being lost. And what happens is that we have what's called a halving, and that means like half, that kind of halving. This amount halves every 4 years. Thus, a finite amount will always be available. Will be available. Right. So conversely, the fiat and paper money, with only our good name or somebody's good name backing it, is being printed at an alarming rate. And with the miners, they solved the problems. I'm not going to go into miners too much. They just verify and add transactions to the blockchain, ensuring the integrity of the blockchain and earning new cryptocurrency coins as a reward. And currently, there's a total of 450 Bitcoin being mined daily right now. So in June, here we are in June. So in June of 2012, that was the first halving. So the 21 million went to 12.5 million. And Bitcoin opened at $5 and closed at $6.50 for a return, a performance of 30%. 4 years later, June of 2016, there were 6.25 million, and it opened at $530, and it closed at $700, and the performance was at 32%. June 2020, Bitcoin was now 3,001,125 and opened at 9,500 and closed at 9,800, performing 3.16%. Now, Bitcoin, we have 1,230,000, and that's what's left. That's what's left. And it opened at 65,000, and it's pretty much been, stagnant all month. And that was what I was talking about, a lot of adoption coming in, and the ETFs, and a little manipulation, maybe, of the markets. There's too much leverage in the system, so it makes it easy for institutional investors to manipulate the price. So we're seeing it pretty much evenly at 65,000. But imagine, here we were, at zero when it first started, and then in 2012, by that time, by 4 years later, it was at $5. And then it went to $650, and then it went to $530, and $700, and $9,500, $9,800, and now it's $65,000. You tell me, is this real? Is this staying? Is it, So I say it's real, and I say it's staying. And a little bit about, because it's the biggest cryptocurrency, it's the one that's the most famous, and it's the one that we know the best, that's what's being worked on right now. Plus Ethereum, after Bitcoin's success, thousands of alternative currencies, altcoins, they're called altcoins. Each has a unique feature and uses, but they just flooded the market with different utility. And a lot of them went the wayside, and others are still operating and they're still viable on the markets. Ethereum, the second largest cryptocurrency after Bitcoin, known for its smart contracts, developers build decentralized applications on the platform. So BlackRock, Fidelity, and other entities have been creating ETFs, exchange-traded funds, which imitate Ethereum and Bitcoin, but they're on different markets. They're on, like, the stock market. And so for people who don't want to get directly into the cryptocurrency, you can hedge your bets with being on the stock market with an ETF. But it's the same, you know, it's just a different market, a different way of, a different delivery system. Chainlink is another popular and famous crypto. It connects smart contracts with real-world data, enhancing blockchain applications functionality. And that's all I really want to say about altcoins and cryptocurrency. You're still working the same way as with Bitcoin, off of your wallet and your exchange and into your private, wherever you want to change it to. Non-fungible tokens is another application on the blockchain, and non-fungible tokens are better known as NFTs. You might have heard of some of those. Who's heard of an NFT? A lot of hands. Good. Okay. They're one-of-a-kind, unique, not replicatable, not replaceable digital assets that are stored and managed on a blockchain. NFTs can represent real-world or digital items such as art, music, collectibles, videos, virtual real estate, and much more. The rarity of these items can increase their worth for collectors and investors. Fungible tokens have equal value to each other because they represent the same thing. Example, fiat currency, $1. $1 is equal to another dollar. That's fungible. Non-fungible is when they're all unique. An example of an NFT, there's the Bored Ape Yacht Club, and that's what the series is called. It's a series of cartoon art NFTs built on the Ethereum blockchain. On Friday, the floor price was 8.6 Ethereum. The 24-hour trading volume was 567.6 Ethereum, 66 sales. Ethereum on Friday was at $3,530. So for the 8.6 per ETH per NFT times 3530, each NFT floor price was $30,000, $30,358. It's not my wheelhouse, it's not my cup of tea, but a lot of people, you know, have bought NFTs, and it's a whole different area that's worked on the blockchain, and that's part of it. And then, of course, there's the marketplace and brands. Marketplace of companies and brands operate on blockchains. These companies will solve massive problems that have real impact on the world and are designed to reward people for participating and taking action. Blockchain software nodes are run on independent computers, creating a network rather than by a single entity or corporation. So this is part of the new sharing economy, sharing our computers to fulfill the mission of a particular blockchain community. The digital rewards earned for running the node and fueling the project often can be exchanged for cryptocurrency, i.e. real-world revenues. This is a big incentive to keep running the software and participating. Referral fees and rewards will be common to the economy. You know, you hear about affiliate marketing where people get rewards, they refer something, you know, you go to Target and you tell somebody about Target, you're not getting anything from the Target Corporation. But when you're referring people to something on the blockchain, you might in fact be getting rewards for that action. And it's a great incentive. So if we're in a reward kind of economy, where that becomes a norm, I believe that that's where we're heading to. And then that goes back to the decentralized equality, a peer-to-peer, level playing field, network, community. And that's, I believe, where we're heading. And, you know, to give you a couple of examples of some blockchain projects, there's a project that I know of, it's called Revo. And Revo is now starting up. It's in Florida, it's in Texas, it's in California, it's in different markets. It's opening up Las Vegas, Atlanta, I don't know. But it's what it is. It's a rideshare company on the blockchain. And what it promises is that where you have Uber or Lyft with the top-down structure, they're making the money up there and the drivers aren't. It's really amazing how little the drivers are getting and how much the corporation is getting. So Revo's going to come along, and with adoption, with more cities opening up and more people using it, where the driver is going to make more money, the passenger is going to get better rewards and pay less, and everything will be rewarded in between. You refer somebody to this driver, or you give a tip, and there's rewards both ways. And it's networked so that you don't, you know, it's equal. It's an equal playing field. I think a lot of those Uber drivers are going to go jump ship, and they're going to go over to the new rideshare because there's more benefit to them. They're going to make more money, and they're going to be treated better, and it's a win-win for everybody. Grow is another project which, to give an example of farm to table, everything will be known about what was grown, what was in that, how long was it there, the animal livestock, what they ate, when they had any kind of medical issues. Everything will be on the blockchain. And it's pretty exciting because and why this is important is that there are about 10 major corporations that run all the food on the planet. And you know, I mean, even the conglomerates are part of other conglomerates. It's huge. Maybe 10 different entities take, you know, and we don't know what's in the food. And we don't, you know, I like to know. And I think we're heading in the direction where more and more people want to know, and it's important, and it will be addressed. And in Grow, it does get addressed. Galvin is a project about medical issues, where you can have your medical records on the blockchain, where you are shown by an app what you might need to do today, different than Fitbit or those other kinds of things, but you know, what you need to do to make it better today, all kinds of things. It's still in formulation. But when you have your medical records on the blockchain, and let's say millions of people are using Galvin and they have their medical records on the blockchain, there won't be any rare diseases anymore. Because there'll be a database of everything, so you can know everything that's going on if you need to know that. So, you know, maybe we'll have a healthy society. And that's what we're going for. These are different, you know, projects that include all of us that perhaps make the planet better, and perhaps just bring more equality to the planet. And one more, there's a project called Element, Element is about mining. The mining, I'm told, is terrible. They use slave labor, they use kids, they leave holes in the ground, they just in total disrepair, and now Element is changing that. And because they will get certified to be an Element kind of, sustainable, carbon neutral, and not using slave labor, not using kid labor, putting the planet back together. Digging a hole, you fill the hole, you plant the trees, you do whatever it is. It's all about responsible mining at that point. So everything that we're dealing with, that these new projects, these new brands, these new companies can emerge to, is all, new and different, and I think very much wanted and needed in our society now. And, having been, maybe we know a little bit more now than we did before, and I hope that you do, follow up with some due diligence, and get with me after, sign up over there for further conversations. Like to have a community here who understands what I understand. That would be fun. And if you're watching me on the video, I'm at melody.blake@gmail.com. You can get a hold of me that way. So, thank you all for coming out today.
Thank you. I still have no idea what
You're not on?
No.
Now you are.
Thank you so much. I still don't have any idea what the hell you said, but I'm closer. So I'm going to take questions. If you raise your hand, I'll come around, and you can stand up if you may and say your question.
Do you know what the cost is to create one NFT, like of a piece of artwork?
No.
Okay.
Again, this is blockchain 101.
Thank you, Melody. Two questions. One of the promises of Bitcoin was the eventual use of Bitcoin in retail sales, where you could, go and buy a cup of coffee with Bitcoin. And I'm wondering if you could comment on what happened with that, because it still seems that it's not a friendly, accepted currency in all retail environments, number one. And number two, with all this connectivity and all the fears we have of AI, why aren't we terrified that AI is eventually going to figure out how to take over this technology to the detriment of the entire planet?
Well, that sounded like a black hat kind of a comment. Doom and gloom. Yeah, I mean, I don't know. I don't have a crystal ball. I'm told, and who I follow, and what I've learned is that, there's a supply and demand issue here with Bitcoin, especially, because it's finite, because it started off with 21 million, and now it's down to the number that it is, 1 point something million. And because it's, finite, there's supply and demand issues. That's why it's at 65,000 now. But, as long as the whales don't manipulate the market too much, it should go up because of supply and demand. There just isn't that much anymore. And there's more of a demand for it now. So, as far as the other question, what was that again?
Retail.
Oh, yeah, I mean, the craziness was when it was first created, I think you bought 10 pizzas or something with 1 Bitcoin, and it's like, that was the pizza story. And so it didn't have value, but now it has value. But, how are we going to actually use it to switch currencies? And I don't know that it's ready yet to do that. I think you still have to take whatever currency you have as an asset, and you still have to put it onto an exchange and exchange it for another currency, i.e. USD or USDT. So USDT and USDC are what's known as stable coins. They're not crypto per se because they're tied to the dollar. So, you can still pull out your crypto in dollars. And that's how it's being operated now. And there is no direct, there might be some where some vendors take crypto as payment. And there might be a lot. I'm not aware of how many, but it's not at adoption yet. It hasn't really gotten to adoption yet. Good question.
This is a bit of a comment.
A bit of a comment is coming.
The brick,
What?
Brazil, blah, blah, blah. It's,
Okay.
what they're doing with that is trying to replace the dollar as the thing. And very recently, they think they've got 128 countries that have signed up for it. And it's a Bitcoin blockchain type of operation.
Okay. I'm not as familiar with that, and you started off by saying in Brazil, how many countries? This is a what they call a hybrid coin, because and there are other hybrid coins that are coming about. There are stable coins and hybrid coins and cryptocurrencies and everything, and some will make it and some won't, just like everything in life. And we're going to wait and see right now with that. So we'll just have to wait and see.
I'm not sure how to state this, but every time I look at something, we talk about you put all this money in and you have these machines that are mining gold. And you can get all these things that are digging for gold 24/7. But the thing that always I stumble on is all the energy that is taken. So many of these mines are located right next to huge generation plants. It seems like the energy question is a big issue. And I don't know how to ask the question, but maybe you can say something about that.
Yeah, I don't know much about that. I know that, in this project, they're making the land and the mine better afterwards than it was when they got there. That's the goal for this project. And of course, you can become part of that community and help it expand so that it becomes the way of doing things in the future. So there won't be empty holes left and land raped. And there will be conscious and humane activity on the planet. So, we've lost a lot of that.
Like I said, I don't understand all this, but the ones I'm talking about are actually not creating a physical whole. These are all some part of something that is mining something called gold, but it's not actually mining. There are these machines going constantly. I'm sure somebody knows more than I do.
Are you talking about Bitcoin, or are you talking about mining gold? In gold mines? What do you mean?
He's talking about the energy that it takes to do what you call mining.
Okay.
Is there a problem?
Are we talking digital mining?
Yes, digital mining.
Are we talking, okay. Again, we're in new territory, and I don't have the answers for everybody and everything. Bitcoin mining, they only have 450 Bitcoins that they can produce per day now. There are Bitcoin miners doing that with their big machines. And there are lots of electricity that they use. But I don't think you're referring to that. I think you're referring to gold mines. And
No, he's referring to what you just said.
okay, well that's the answer.
So
I have.
if the answer is, question is this going to create so much of an energy drain in the world? We're already using so much energy for everything. Is this a efficient use of energy?
I sure don't know.
Okay.
Just in response to that question, it's my understanding that probably 5% of the energy use right now is going to Bitcoin and other mining operations. And I've read where, when you add on AI, you might be talking about 20% of the energy production in this country going to that kind of service. One of the positive things, at least in some of the mines in Texas and probably elsewhere, is that those miners will stop when the energy is most expensive, and therefore may not cause the peak electricity demand to increase, but there's still a lot of energy usage. Some of the miners try very hard to contract for renewable energy to supply their system to reduce the environmental effects. But still, it's an awful lot of energy going to computers and to AI, both in this country and around the world.
He always gets nervous when I have a question.
Hi. Could you explain what you meant by virtual real estate? Because that seems a little oxymoronic to me.
Well, the metaverse is a different reality altogether than we are up here. And there are people who, are on their platforms, their devices, and they're, living, in a different reality, in a different alternate reality. And digital real estate would be the play real estate that has value in the metaverse, which I don't know much about. But, again, this was 101. Disclaimer, introduction.
So do you mean like somebody would buy an acre of...
In digital land.
Yeah.
Yeah, could be, yeah.
Why would that ever have value?
Well, I don't know. They have a different world there, As far as real estate on the blockchain, real estate can be on the blockchain too. So it's such a broad area. All I wanted to do is touch and maybe get you somewhat interested in finding out more, or not being afraid of it, or not being daunted by it, because this is our future. And, I just wanted to touch on a little bit and energize the conversation. So, David.
Melody, a quick question. All this knowledge, how does it affect your daily life, your decisions, your investments? In other words, you know a lot more about this than I do. So how does this change the way you behave?
I have been fascinated by this since 2016, and I've dabbled along the way, and I do have assets, and I'm not going to go into, altogether what they are. And there's been a lot of learning. It's been a big learning curve, and there's been some wins, some gains, and some losses along the way. And like I said before, I'm living a great life. I want to be retired. I mean, and yet I want to be curious, and I want to be, inspired and motivated by things. And this inspires me. So it's not, heavy duty work. Sometimes I get a little bit too involved. I pull back, just like we all do when we get a little bit carried away with whatever we're doing in our lives. So I have made this as part of my life because I enjoy it. And I am working now with these companies, these cutting edge, making the planet a better place companies. And so, I certainly can share that information with us individually in conversations. But I'm happy. I feel very secure. I feel very secure in my home here. I feel very secure in my life. It is the best place I've ever been in time in my life or in place in my life. And I love this community, what I said earlier. And, I love the sense of our community. And the fact that we are very decentralized here. We are not top-down people. We are network people. You know, we are looking for, each of us, I believe, our own authenticity. And, you know, I think we gravitate to projects which will, in fact, resonate with us for their authenticity. And that's why I wanted to mention those 4 projects, because they resonate with my authenticity. I mean, they resonate with you know, with their authenticity and mine, and the direction that I want to go in. So I'm participating with those and wanting them to grow and wanting them to expand, and anything else that makes sense to me. You know.
I have a black hat question for you. You know, a lot of people say people can move money around and nobody know about it, but I heard an FBI gentleman on a podcast once say that if they need to track illegal money movement, they can actually do it using the blockchain, and it's actually not that difficult. And I just was wondering if you had heard similar things, or if you think it's all anonymous and can't be tracked.
I don't have an opinion on it, because, you know, I don't know about that at all. You know, so I really don't have an opinion on it.
Okay, I'm going to need to end this. I'm going to take this one, and then you're going to have to ask her personally.
I can answer that question for you. My background is a tax accountant, and I'm constantly taking courses on the internet. I've taken maybe 3 crypto courses, and there was a case of a divorce where the lady was divorcing and they couldn't find his cryptos account. She found 1 crypto number. They put it on the internet, and they found 20 other accounts. This is not secret. Every transaction is transferred on the internet. From the 1 transaction, they found there's 20 other accounts, and she got half of that $20 million. You can't hide. It's all out on the internet, every transaction.
Well, let me qualify that. First of all, it is highly more than suggested that we don't take our private keys and put them into any device. We don't put it in there and then store it somewhere on the cloud. We don't do that. It's paper. It's in paper. It might be in a safe. It might be in a vault. But it's on paper. It's not, because what you're saying is true. It would be hackable if I put that in on a device. So I'm not going to risk that. And anybody who does is, in fact, risking their assets.
One more.
Yeah, good.
Okay, this is all incredibly confusing. But thank you for making me even more curious about finding out about it, because I do feel like it is our present and future. What I'm confused about is the blockchain. I mean, the Bitcoin was supposed to level out the playing field, and if it's valued at $5 or $6 a Bitcoin, that sounds level to me. But when it's up to, you know, $550 and then up to $65,000, that doesn't sound level to me at all. I mean, I can't even imagine buying 1 Bitcoin if that's what it's valued at. So can you speak to that part about how it's supposed to level out the playing field?
Yeah, that's a good place to end on, yeah, for sure. Well, it's going to go even higher. So, you know, people are going to continue to buy it until there aren't any more to buy. And we don't know what price it's going to be selling at. Right now, it's selling at I didn't look today. I'll say approximately 65,000, unless it did something heroic and went up. Level playing field, as far as, you know, any one asset goes, the level playing field is for the blockchain. Now, as far as Bitcoin goes, depending upon when you have purchased Bitcoin, or and purchasing Bitcoin, for those who don't know, is fractional. Fractional. It's not. It doesn't have to be 1 Bitcoin or more. So you're not paying $65,000 because you're not buying the whole Bitcoin. There are less whole Bitcoin owners than there are fractional. Whole being 1 and up. There are mostly fractional. So you can buy into 0.00015 Bitcoin, and that'll have a value, and that's all you have, and you want to add to that. But it is not required that you put 65 grand down for Bitcoin. And as far as, you know, the level playing field, everybody had an opportunity to get in, as it were, at some point, and if they don't choose to, then they don't participate in that particular asset. And, you know, just like any asset. Now, I know for me, I had some very good stock early on. Years ago, Disney took very good care of me, and Microsoft took very good care of me. But I didn't get in on Amazon. I didn't get in on Google. I didn't get in on Facebook or Apple. And, you know, right now I think I have an opportunity of being where I am and positioning myself now and learning what I'm learning and participating with the people I'm participating with, that I have a different opportunity than I do now about anything else. So this is a great opportunity. Thank you all. Please sign up if you'd like more conversation.